Let me go across to Mangalam Maloo, who's been pouring through all the numbers. He's got all the lowdown on D-Mart and its spectacular debut. Mangalam, so many words to describe it: spectacular, fabulous. But tell us about the numbers.
I'll tell you what, Sonia, it was only celebratory for the markets for a man who has identified so many multi-baggers earlier in his investing career to give at least 100% uptick to the stock that listed. But there's much more reason than that to D-Mart's stellar debut, the words that we're using today. There are 4 reasons and 2 questions that I've identified. The first reason was, of course, the legendary investor promoted. The company was promoted by Radhakishan Damani, and we all know of his legendary status as far as companies and identifying investment opportunities and running businesses is concerned. That was reason 1. Second reason, because of the legendary status of the promoter, we also saw some strong financial backing coming in, financial performance coming in for D-Mart. In fact, between FY12 to FY16, the 5 years, the company's revenues have grown at a compounded annual growth rate of 40%. The EBITDA has grown at 47%, and the net profits have actually grown higher than 50% per year for 5 years. Same-store sales growth is something that we very closely track in retail, and that has grown at 24% too. Not just that, they also own almost all of the land that they have on the 118 stores that they have. So good real estate in the company too. The third reason, when they came out with an IPO, there was a lot of value left for the investors. Attractive pricing at issue price of 299 rupees per share. The company was valued at 15 times 1 year forward EV to EBITDA. So that generated some sort of interest. So the first 3 reasons that I spoke about, the legendary promoter, great financials and attractive pricing, resulted in the 4th reason, which is massive demand for the IPO and supply squeeze for the stock. So if you take a look at the IPO, which was oversubscribed by 106 times for a 1870 crore issue, which saw a supply squeeze even on the day of listing, because retail investors held just about 3.5% of the company's total market cap. So there was strong demand, supply squeeze, taking the stock price higher, above that 40,000 crore in the market cap. Now that begets 2 questions that need to be asked. The first one, how much value is too much value? Because if you take a look at after today's move, the D-Mart share trades at 31 times 1 year forward EV to EBITDA, and that compares to its peers like Future Retail, Shoppers Stop, all of them trading at much less than half of that as well. And if you just to give you some perspective, majority of D-Mart's revenues come in from FMCG companies, and today D-Mart's market cap has crossed some of those very FMCG companies like Britannia as well as Marico. So that begets the second question that we need to ask. Historic stellar financial performance, will that sustain or not? If that does, then there is no reason why the company should not be trading at the valuations it is.